Well, stocks are expensive, complicated, and only for the wealthy? Nah. What's up, everyone? My name's David, and today's videos we're going to talk about what are stocks, some of the strategies, and some of the myths. Stay tuned. Hey everyone, I decided to make this video because one of my friends had a question with investing in stocks, so I thought I'll share with everyone my strategies and some of the experiences I did. So the first question is, what are stocks? A stock is a form of investments that's broken into shares of ownerships of a particular company. So if you think of any companies that you may know of, whether it's McDonald's, Apple, Tesla, Netflix, Google, Amazon, and the list goes on. When you invest in stocks, there's two main components that you have to think of: the buy and sell. So when you're buying these shares of these companies that are traded publicly, you're actually a part owner of the company. When you're buying stock, the total investment cost for you is the number of shares that you have that you're purchasing, along with the current price. And when you're buying a share of a company, it's a legal obligation where you will give your money, your capital, or the cost in order to receive the benefits for the appreciation of the company. Also, keep in mind that when you're purchasing a stock, the transaction isn't completed until you sell it. So any gain that you have isn't realized until you actually sell the stock. When you're selling the stock of a company, you're getting out of your investment position in order to recoup your gains or any investments. For example, let's say you purchased stock at $100 and then you sold that at $110. The difference for what you purchased at and then when you sold it at is $10. So if you bought multiple shares, you will multiply $10 by the number of shares that you were selling. The main takeaway for investing in stocks is buy low and sell high. For anyone new in investing in stocks, you're probably thinking that you gotta have to call someone who wears a suit and tie that trades on the New York Stock Exchange or some hedge fund manager. Nope. There's so many platforms that are online right now that you could trade on, and you don't have to rely on someone on your behalf to trade for you. I personally use TD Ameritrade, but there's all these different platforms out there that are free too, such as Robinhood, Charles Schwab's, Fidelity, and so many more. There are three main strategies when investing in stocks. Those are day trading, long-term investing, and drip. For the day trade strategy, the name says it all. There are people who trade stocks within a day, within the hour, or within seconds. The people who specialize in day trading are often people who look for mispricing in the value of a company or any volatile companies in general. They look for that companies that have huge swings that they can trade off of in a short period amount of time. So when these companies make a drastic change, they bet heavy that it's going to happen. I personally don't do day trading because the statistics shows that it's very risky and the majority of day traders actually end up losing value. For a disclaimer, if you get involved in day trading, make sure that you do research and don't just follow the crowd. So don't invest in companies that are penny stocks, companies that are going bankrupt, or just hyped up. Keep in mind that bulls make money, bears make money, but pigs, they get slaughtered. The next type for investing in stocks is long-term or value investing. For long-term or value investing, it's definitely slower than day trading, so you may not even see a gain within the month, the year, or within years. But you have to keep in mind that it's a long-term process that actually is beneficial in the long haul. For example, according to CNBC, the S&P 500, which is a measurement of the largest 500 stocks and companies in the US, was able to increase in an average value of over 9% over a period of 90 years. Although long-term investing is the most exciting or the coolest form of strategies, it works. Also, if you're a long-term investor, you can do DRIP investment strategy. Not this DRIP, but this DRIP. And DRIP stands for Dividend Reinvestment Plan. The great thing about a dividend is that it's in addition to your appreciation of the company or your stock. The great thing about DRIPs is that you're able to buy fractional shares to be reinvested into the company. So just think of it as a snowball, where initially it starts out small, but then with more dividends over time, it grows up to a bigger fund or investments you have. I personally do DRIPs whenever it's available with the companies I invest in, if they offer stocks, automatically. So I ask that if it's in your prerogative, look into it. All right. I know there's some of you out there that says, David, this is too good to be true. Stocks are bad, I've lost money, and I just don't understand them. And I get that. When I first started investing in stocks, I was really nervous and really cautious of investing in money. So what I advise is review the tips and strategies I said before, along with doing paper trades. If you're hesitant or cautious, I recommend that you do paper trades. And paper trades are basically using fictitious money that you're trading with real stocks. So you're able to analyze, get some practice, and figure out what strategies you're most comfortable with. To give you more assurance, I'm going to address some of the myths when investing in stocks. But before then, make sure that you subscribe to my channel if you're finding that the information that I'm saying is really helpful and insightful. These are the top myths for investing in stocks. Stocks are too complicated. I'll admit, stocks can get complicated with technical analysis and ratios and financials, but it doesn't have to be that way. You should be able to invest the way that you know within research and your expertise. The simplest and easiest thing you should do is research and read about the company. Figure out if there's new products, if there's new promotions, or there's going to be a new president that's going to be leading the company. That way you can figure out that if the leadership or the product isn't what you want, you can back out in your position where you can just sell the transaction and investment. And the key takeaway for this myth is that what I said before, buy low, sell high. So if you had one thing to take away from this video is that you want to buy low and sell high. Number 2, stocks are expensive. There are stocks that are really expensive, such as Amazon, Tesla, Google. The great thing about stock is that you don't have to buy the stock itself. You can purchase what's called an ETF. ETF stands for Exchange Traded Fund, which basically means that it's a fund or type of investments where other people can pull in order to connect towards an underlying asset. So similar to the stocks that I mentioned before, Amazon, Google, Facebook, Tesla, you're able to invest into a fund or ETF where other investors can pull in order to collaborate into the investment. So if you want to invest in a stock that's really expensive and out of your price limit, just look into ETFs that have stocks that they purchase into in the fund. Now you understand what stocks are along with how you can make profit with other options that are more affordable within your means. But you're still thinking that it's more risky. The third myth is that it's risky. So it is true that stocks are risky and there are companies that do go bankrupt. And nothing lasts forever, including companies. Unless you're talking about student loan. That lasts forever. As I mentioned before, I wouldn't recommend investing in penny stocks, companies that are going bankrupt, or companies that you don't follow their ethics, just because they're going to be in the news and they potentially have the risk of going out of business. Overall, don't let your fears or nerves stop you from the opportunity from creating wealth and income. And if you have any questions with what I said before in terms of strategies or any of the myths that you are still worried about, feel free to comment down below and I'll answer them for you. Thank you everyone for watching my video. If you feel like this content was really helpful for you, feel free to like, comment, share, and subscribe to my channel. Thanks. Peace.